JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 3rd of December 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts. Now, the first one I want to pick up here is Nikkei 225. Again, the index struggled to remain above this 26,834 territory, which is the high of the 30th of November, or in other words, the highest point of November. We keep getting these overshoots, but we don't get that close above it. So, on the other side as well, we can see that the index kind of remained. Let me just adjust this very quickly here. It kind of remained near this, or even actually I would say slightly below this steep upside support line drawn from the low, the 30th of October. However, it's still not a clear one, I would say, because it's a bit of a tricky one here. I would so that's why probably let's keep this upside line on this chart, but not really focus on it too much, because we'd rather stay focused on some key support and resistance levels. So the resistance level, of course, is this 26,834 territory, and for the downside, well, we could start looking at some lower areas, maybe from around here somewhere, at around 26,405 zone, roughly around there. And if we get a drop below it, then well, maybe we could go for that 26,000 territory or even below that. So be very careful, guys. For now, in order to get comfortable with the upside idea, as I mentioned before, we need that daily candle close above this 26,834 zone. So let's keep an eye on that one. Now, Shanghai Composite, and here basically the index is kind of trading near this upper bound of the range that I kept talking about for quite a while, guys. And basically for now, I'm keeping an eye on this one, and in order to aim for some higher levels, we need that confirmation break, and we ideally that daily close above this area in order to get comfortable with the upside. For now, it's a little bit tricky here, so yep, although everything's kind of leaning a little bit more towards the upside, however, we're very near this key strong resistance area, which is the upper bound of this range. So let's be very careful with that, guys. In case this suddenly starts dropping lower, well, keep your eyes on the 21-day EMA. Probably that's going to be the more interesting one to watch, because as you can see, recently it did act as a good area of support. Even though we had a bit of an overshoot here on the 13th of November here, but nevertheless, the daily candle still kind of closed above this 21-day EMA. But if this time we get a nice close below this 21-day EMA, then yep, that's where more sellers could join in. Now jumping into German DAX, and here the index drifted lower. It remained below this hurdle here, the 13,347 zone. It still remained above that 13,300 level, but we've removed that, if you remember, and now we're kind of focusing more on this potential idea of seeing maybe an island reversal. However, it's because it's not a clear one, and if we look at the cash index right now, let me just quickly jump into that. We can see that the price is currently trading where it closed yesterday. So we're still trading below this 13,347 zone. But we're still kind of hanging above that 13,300 level. So in a way, this idea could still work out. We could still see a bit of a move here lower towards this upside support line taken from below the 13th of November. Yep, if we get a nice rebound from it, then another push higher could be possible. So keep that idea in your minds, guys. However, if this upside line gets broken and we see a further decline below the 13,000 territory, now that's where it could become very interesting for more sellers. So keep your eyes on that one. But at the moment, even like I said, even if we see a bit of a correction lower here, still we are keeping an eye on this upside support line taken from below the 13th of November. Now jumping into Brent Oil, I haven't looked at this one for quite a while, so let me just remove all the lines here and the drawings. Similar story as with WTI oil as well. So basically the commodity managed to remain above the highest point of August here, which is around the 46.50 territory, and as you can see now, yesterday it kind of pushed higher, and today it's kind of trying to climb higher as well. But again, if you want to be a little bit more on the safe side, well, wait for a push above the highest point of November, which is around the 49.06 level, if I'm not mistaken. Yep, that's the 49.06. That's the level to watch, because a break of it would confirm a forthcoming higher high, and it could open the door towards these higher levels, where the next potential target could be the highest point of March, and that's roughly around the 53.86 zone. So be very careful, and like I said, if you're not really comfortable right now, then yep, wait for that confirmation break. In terms of the downside, well, I would need to see the commodity not only drifting below the 46.50 territory, but also somewhere below this level right here, the high of the 11th of November, which is around the 45.28 zone. At the same time, the price would be placed below the 21-day EMA, and maybe more sellers could see this as a good opportunity to step in. Now jumping into DXY, the dollar index, and look at this beautiful move. We've managed to reach that 90 point, let me just scroll back here a little bit into history, 90.93 level, which is the highest point of March of 2018. This area previously acted as a good resistance level. Now you can see that it's acting as a good area of support. Now don't get me wrong, I mean, if it breaks further below that area, yes, it could open the door towards lower areas. However, in this situation now, I would prefer to see where the daily candle will end, because if it stays below this 90.93 zone, then yes, lower levels could be met, and we could then aim for this little high here. Let me just put this one on the chart. The high of the 5th of April here, which is around the 90.59 level, and that's going to be my next target. If we see the this index, the dollar index, kind of staying below the 90.93 zone. If it doesn't stay there, then maybe we could see a bit of a correction here to the upside. However, if this downside line continues to provide good resistance, then another slide could be possible. So be very careful with that, guys. Now gold, of course, gold is enjoying the weaker dollar, and it's pushing higher. Yesterday it broke and stayed above not only this downside line, but also above this 1818 level, this way opening the door towards higher areas. Now my next target for now, probably the short-term target, will be this 21-day EMA, which is roughly around the 1845 zone. So I do understand that it's not far from where it is right now, but I'll be very careful here, because slightly above it we do have another obstacle, which is the which previously acted as a good area of support. Now it could be seen as a good area of resistance, the 1849 level. So be very careful with that one as well, because if that gets if that continues to provide resistance, then, well, or not, I wouldn't say continues, but if that provides resistance, then we could see another slide here, maybe back towards this 1818 level, or this 200-day EMA. But if that gets broken, then, well, I mean, of course we do have a bunch of nice levels here above, like the 1860 or the 1877 territory, but actually the 77 needs to be adjusted now, probably a little bit, to the 1880 territory. Yep, that's the high of the 20th of November, and then we'll take it from there. So for now, basically, long story short, guys, given that we are seeing a good move here above this 1818 level, my next target is the 21-day EMA together with the 1849 zone, and then I'll take it from there. Ethereum. I looked at this one in the beginning of this week. If you remember, I said to you guys that keep your eyes on this and this area, this resistance area, the 623.50 level and the 637 zone. As you can see, we've managed to overcome the 623.50 territory, hit the 637 zone, and then reversed back down and kind of stayed below both of these areas here on Tuesday. Now, what I was also saying, that be very careful, because this could in a way kind of confirm a possible double top pattern, but we cannot really talk about that yet until we see a breakthrough this so-called neckline, which is around the 516, well, let's round it up towards the 517 zone, and that level, by the way, is let me just go back into history a little bit here, and that level is the highest point of July of 2018. If the highest point of July of 2018 surrenders, then yes, of course, this will confirm that possible double top pattern, because, like I said, the neckline would be broken and further declines could be possible. But at the moment, all eyes are on this little short-term upside line taken from the low of the 3rd of November. So let's see if that continues to provide support. Now, ADNZD. Yesterday, guys, if you remember, I talked about this pair. If you watched one of my videos yesterday, so you'll remember that I talked about this this idea, this pattern, where basically, first of all, that we've managed to find some support near this 1.0412 territory, and this level is the opening level of this year. So basically, so far, the pair remains in positive territory for the year. And what I was saying, that if this continues to provide support, we might see a bit of a rebound. However, we cannot really talk about the upside yet until we get a break of this. A break through the upper side of the falling wedge pattern. Of course, as you know, all these patterns tend to be bullish, and but a confirmation break above this upper side of the pattern is required. And if you want to be a little bit more on the safe side, also a push above the 1.0522 territory here, marked by the highest point of the current highest point of this this week, could do the trick here for more buyers. And we could then aim for a further move north. So for now, everything's kind of looking a little bit more positive here for this pair. So, but again, let's be very careful. Let's see how this is going to play out. Of course, guys, always have your stop losses in place, and everything will be fine. ADJPY. So finally, I talked a lot about this pair this week, and finally we had this break, and we had this daily candle remaining above the 77.10 zone. So my next target is the 77.74 mark, which is the high of the 10th of September. But if that is just seen as a temporary obstacle on the way here, then yep, my next target is the 78.46 marked by the highest point of August. In terms of the downside, pretty straightforward. A break of this upside line and the drop below the 76.50 territory here would be needed. USD CHF. So this one is, of course, on the weaker side. Now we have a weaker dollar. and we have a stronger CHF, and that's the kind of the result that we're getting here. But what I've mentioned to you guys yesterday when I was covering this one, I was saying that in order to aim for some lower areas, we need that confirmation break below the 0.8983 territory. As you can see, we had that. It is confirmed the forthcoming lower low. Excuse me. So now the next target, the next potential target here, we need to kind of scroll back here into history. And well, I mean, it's going to be a bit of a tricky one. So one of the levels could be this one right here, maybe. No, not this one, but this one right here. Almost. It's a little bit tricky here to capture this. Okay, let me zoom in a little bit. So this little inside swing high, and that little inside swing high is near the 0.87 territory. So the 0.87 territory, is this correct? Let me just grab this one, guys. I mean, yeah, let me just zoom in here a little bit. I'm trying to find what that was. So there we go. Come on, catch it. Okay, I need to probably continue zooming in here a little bit. So that's the date. There we go. Is that correct? Is that 80? Okay, so sorry, the 88.37 level, that's the target. There we go. That's the inside swing high of the 20th of January of 2015, guys. If you remember, that's when the Swiss central bank untied its currency from the euro. So yep, that's that fall that we had here. So January the high of January 20th of 2015, that's the level around here, and that's the 0.8837 territory. So that's going to be my next target. Let me just move back to where we are. So that's going to be my next target. So let's see how this is going to play out, guys. But at the moment, yep, could be quite interesting. This is, like I said, the level that I'm keeping an eye on, especially if the rate continues to trade below this hurdle, below this breakout point, the 0.8983. And then, yeah, we'll take it from there, guys. For now, like I said, don't get me wrong, we might at some point we might get a reversal here, but if the rate, as I said, continues to trade below this highlighted area, then a further decline could be possible. GBP Aussie, quick update on this one. I haven't looked at this one for quite a while, to be honest. But as you can see, recently it started kind of moving sideways a little bit here. First of all, we can ignore this upside line, because previously what I talked about was that if this upside line gets broken, then yes, lower levels in a way could be met, but still we would need to see a drop below this 1.80 territory. We'd need to see a nice good strong move below this 1.80 zone. Actually, I'm going to keep this upside line because as you can see so far, it's kind of working out nicely here. So we got a drop, but we didn't. We got a break of this upside line, but we didn't really get a nice good move below this 1.80 zone. So in a way, this 1.80 zone continues to be that strong area of support. Also, what I've mentioned previously, guys, to you, that this whole pattern could be seen maybe as a potential double head and shoulders pattern, a double head complex head and shoulders pattern, basically. So we have our two heads here, we have one shoulder here, and we have kind of a few shoulders here, but within this shoulder we have another head and shoulders. So basically that's a bit of a or in a way this of course worked out nicely as well as a double top pattern. As you can see, we got a break through the neckline, but now the all eyes are on this little hurdle, this 1.80 zone. If we see the pair dropping and staying below that area, below that 1.80 zone, then yes, further declines are possible, guys. We will then target the this little area right here, the inside swing high of the 17th of September, the low of the 1st of October at the same time, and that's the 1.7840 territory, approximately around here. And then we'll take it from there, guys. But in terms of the upside, I would need to see this one maybe traveling back above this hurdle right here, the high of the 1.8248 zone here, and then yes, higher levels could be met. So keep your eyes on that one. Euro against the Turkish Lira. Now, I've looked at this one a while ago, and basically I just wanted to give you a quick update on what's happening here. The pair did find good resistance here near this 9.55 territory, reversed back down, but found good support around this 21-day EMA. And as you can see, now we're pushing another higher, and most importantly, it's kind of confirming a forthcoming higher high now, and it's breaking this 9.55 territory. So this way, kind of opening the door towards a further push, possible further push north, where my next target is the 9.6882 zone, marked by the high of the 11th of November. But if that breaks, well, I mean, maybe this could set the stage for a move back to that psychological 10 zone. So be very careful on this one. In terms of the downside, previously I talked about this level, but now probably let me just adjust the level here. So that's what I'm going to be keeping an eye on. So look at this beautiful level here at 9.2558, marks the inside swing high of the 17th of November and the low of the 27th of November. So a nice good drop below this may open the door towards the, of course, that psychological 9 zone, but it also could open the door towards that lowest point of November near the 8.8982 level. So let me just quickly put an arrow here on the chart. So that's for the downside, guys. And finally, EURUSD. So this pair is pushing nicely to the upside, and yesterday it climbed higher, and basically we're now on the right track of possibly testing this this 1.2155 territory that I talked about. And that level, let me just scroll back here a little bit, that level is that lowest point of March of 2018. So good potential target, previously acted as a strong support zone, now it could be seen as a strong resistance area. So be very careful on that one. That's, like I said, that's my target, and then I'll take it from there, guys. If it wants to pop higher, then yep, good news for more buyers. We could then maybe aim for this little level right here, the low of the 6th of April 20, yep, the low of the 6th of April of 2018, guys, and that's roughly around the 1.2215 zone. So let's keep an eye on that one. But at the moment, everything's looking quite positive. My target is the, like I said, the 1.2155 territory, this one right here. So let's see what it does near that area. So guys, I hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. If you want to catch my video later on, my trader's tea time is always 14:15 GMT. For now, guys, I hope you have a wonderful, wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.